You have 500 Moroccan dirhams, and you're wondering, can that small amount really make you an investor? Short answer, yes. Not overnight, but it teaches you how the market works, how to read a stock, and how to build the habit early. In this lesson, we'll use real Moroccan market numbers to see what 500 MAD can and cannot do. Let's start with the number that matters, 500 MAD. That is your budget, not your limitation. With 500 MAD, you probably won't buy every stock you like, but you can begin understanding price, earnings, and value. Some listed shares cost less than 100 MAD, while others cost more than 800 MAD. So the first beginner lesson is simple. Affordability and attractiveness are not the same thing. Here's a sample of real prices from the Moroccan market. Enocol is priced at 49.3 MAD, meaning 500 MAD would be enough to afford multiple shares in theory before fees. IM is 92.1 MAD. BOA is 203 MAD. BCP is 240 MAD. AFI is 338.4 MAD. MRL is 348 MAD. And CIH is 364.5 MAD. But Maghreb Bail at 882 MAD is already above this budget. So 500 MAD can reach some stocks, but not all. Now let's learn one beginner metric, the PE ratio. P means price, E means earnings per share. So PE tells you how much the market is paying for 1 unit of company profit. Example, Enocol has a price of 49.3 MAD and earnings per share of 5.0 MAD, giving a PE of 9.9. That doesn't mean cheap or expensive by itself. It means you now have a tool to compare companies more intelligently. Let's compare real PE ratios. Maroc Leasing and Maghreb Bail both sit at 9.0. Afric Industries SA and Enocol are at 9.9. BCP is 10.8. IAM is 11.6, Bank of Africa is 11.7, and CIH is 11.9. Notice something important. The cheapest share price is not automatically the lowest PE. Price alone can mislead you. Beginners should learn to compare price with earnings, not price by itself. Now combine both ideas, price and PE. Enocol has a low share price and a relatively low PE. CIH has a much higher share price and a higher PE. But a lower PE is not a guarantee of better performance, and a higher price is not proof of quality. The lesson is to stop asking only, "Can I afford this share?" and start asking, "What am I paying for the company's earnings?" So, can 500 MAD really be enough to invest? Yes. Enough to start learning with real market data, real prices, and real valuation tools. It may not give you access to every stock, and fees still matter, but it is enough to build the right habits. In the next lesson, we'll look at what fees do to a small budget and why they matter so much when you start small.